Hey there, Casey Stubbs here. Today I'm doing a training on what is trading. This is a beginner's look at the markets. It's based off an in-depth article on tradingstrategyguides.com of the same title, What is Trading? We'll put a link below in the description. But if you are a beginner and you want to learn, this is a great place for foundation. I'm going to go over some very key basics, and I'm going to go over some definitions. So if you want to get started learning to trade, this is the place to go. All right, so we're going to start with the definition of trading. So trading can be defined as the exchange of money for goods and services. But beyond that, we need to go one step further to understand financial markets. When we talk about trading today, we're referring to trading, which is what we call trading financial instruments. So that's the basic definition, but really it's, okay, I'm going to clean your yard and you then give me $100, right? You give me $100 to clean your yard. I'm trading money for time, money for services. That's a trade. Or maybe I want to give you $100 for that new ladder you have. I'm trading time, I'm trading money for an actual item. Okay, and that's the basic definition of trading. But then when we break it down even further, we're talking about trading in the sense of financial trading instruments, which is a stock, which I have the definition of that at the end, future, currencies. There's so many different things that we're going to trade in the markets. But let's go ahead and take a look at instruments. What are instruments? So instruments are simply things that can be traded in the financial markets. They can be a share of stock, cryptocurrency, futures contract, or a foreign exchange currency pair. It can be an option. And if all of those are unfamiliar to you, don't worry. We're going to break it all down during this video. But before we do that, let's ask ourselves one other question. How do we start trading these instruments, and why would we trade them? Well, the answer's simple. We go into the markets and we trade them. We trade instruments in the markets, and the reason why we do that is to make money. That's the whole purpose behind the financial markets, is to make money. So what are markets? All right, now, a market. Yes, this is basic. Have you been to the grocery store or the hardware store? Those are basic forms of markets. A grocery store is a market where you look at your exchange and you want to exchange your money for food that you need to eat. A hardware store is a market where you exchange your money for materials, for building and fixing things. That's the definition of a market. Now, a trading market is a little bit more advanced than that because, for one, it's all on a computer, but a market is just a place where those type of transactions happen, and they happen at an exchange, a stock market like the New York Stock Exchange. Okay, now I want to break this down a little bit more here and share how price moves in these markets, because when you're at the grocery store, prices stay pretty fixed. I mean, there's inflation where prices go up, but for the most part, they're going to stay the same from day to day. However, in a market, a stock market, they're going to be changing every second. And why is that? Because a market is like an auction. And you see here, this is an auction. Not really, it's a field of cows. But if you've ever been in an auction, a livestock auction, which I have, where you're bidding for the cows, and there's like 5 or 10 or 20 people all bidding for the price of that cow, and they're saying, do you got $5? Do we take $10? Do we take $20, right? And there's this buying because one person is trying to sell and other buyers are competing to get the cow at a certain price, and that auction can increase the price. And I've been in auctions before. I bought a car once at an auction, and I thought I was going to get a great deal because the price started out low. but then I got very emotional and I wanted to beat the other guy. Then it became a competition. And the next thing I know, I was spending more money because I wanted to win. And that's all start of things that happen inside of a trading market. So one of the things that happens inside of trading, which is emotions. Emotions are what move markets. Yes, it's buying and selling goods and services, but the reason that you'll see big peaks and valleys is because of emotions, and those emotions are fear and greed. Fear and greed is the main emotions that move the market. All right, now the history of trading. We're going to do a little history lesson here on trading because trading has a dynamic history spanning thousands of years. Some of the earliest markets can be traced back to the grain futures in Mesopotamia around 2000 BC. And this is a great image here because there are some places in the world that are like a blast in the past. You go back and you see the architecture. I've been in the Middle East many years ago and I saw structures that were thousands of years old, and it was like, wow, I'm going back in time. It was so cool. Well, the tradings have gone around for a long time. And then it moved on. We saw some history about the Silk Road, which is when the Europeans were trading the Mediterranean all the way to Asia, and there was a road to bring goods and services that were bringing trading. And then more recently, we had a big, huge bubble in the tulip prices in Holland. Tulip prices there was a lot of speculation around tulip prices. So let's throw a definition here, speculation. Speculation is when you have many traders that think that something is going to go up in value, and so you purchase it because you're speculating. And so there was a history in the 1600s in Holland where the tulip bulb exploded in price and it created a massive bubble, and people were buying, and it created this massive frenzy. And then what happened at the end of the bubble? Well, what happens to bubbles? Bubbles pop. And so those bubbles popped and price dropped rapidly, and a lot of tulip traders ended up going out of business, which we see happen today. And then that brings us to modern trading, where it's all done on exchanges, and even further than that, it's done in electronic markets. Most of the traders don't even see each other anymore. It happens all behind a computer screen. But it's important to know the history and how things work behind the scenes and what has happened in the past in markets. Now, when you're talking about markets, we have to talk about trading, and now we're going back to instruments, but there's different types of trading. There's stock trading, which is trading with companies. There's crypto trading, which is different types of cryptocurrencies, which is a newer form of trading. There's futures, and futures is just trading a price on a commodity, a future price on a commodity, very similar to an option. And then there's options, which is an option to buy a stock at a certain price. There's Forex, which is currency trading, trading the dollar versus the yen. Then there's algo trading, which is robots, algorithms, expert advisors, all computer programs that are doing trading. And then it's all brought together by online trading. Everything is done trading online now. Very little market trading happens in person. It's mostly all done online. And it can be done by everyday people like you and me. And then in order to facilitate trading, we have brokers. Brokers are companies that place your order, and they'll send your order from an individual to the exchange. Now, there's also something called a money maker, which is the person behind the scenes that is placing those orders or that's moving those orders, that's sending them to the market. They're a person that has a lot of money or a lot of shares, and they are filling your orders for a fee, which is very similar to what brokers do. And you see this picture here. This picture is a man calling on the phone, and that's what brokers used to do. So this is kind of a blast from the past, but nowadays everything's done automated online. But without a broker or market makers, you cannot trade. Now, there's also different ways to trade. And so let's go into that. There's technical analysis. So when you're trading, we're kind of transitioning here, and we're talking about now how do we actually trade. So now that we know a little bit about what trading is, we want to transition and talk about ways to trade, and we have technical analysis. And so technical analysis is the study and speculation of price movement. There's speculation, remember that term, using technical factors. And so technical factors is kind of like engineering. There's specific things that we're looking for, and it's working behind the scenes to cause price to move in certain ways. And so we have chart patterns. So when we look at charts, we'll see different patterns. And I have a video that I'll link to below that has in-depth analysis of chart patterns, but it's more in-depth than what we have in this particular training. We also have support and resistance, which is key price levels that the charts and the prices will honor. And again, we have a really in-depth training on that as well, and I'll link to that. And support and resistance, you kind of think of, okay, if it's trading at $1, there's lots of people that are buying around that level, around the $1 mark, so there's a lot of orders there, and order flow is what moves markets. Order flow, which is also controlled by fear and greed, and that order flow is what helps make the markets move. Then we have indicators. Indicators are things like the MACD. I have a great video on MACD I'll link to below. I also like some other indicators such as the moving averages. We have great moving average strategies, and I'm not trying to get you distracted. Don't worry about those other things, but I'm just letting you know that we have a lot of indicator strategies in education. We'll just link to them below, but don't get distracted. But an indicator is just a tool on your chart that helps determine price. And then lastly, we have trends. Trends are very important in technical analysis. These all follow under the umbrella of technical analysis, and we do have great videos on trends. But the definition of a trend is price moving in a certain direction for a long period of time. And as traders, we want to try to find those trends, look at the charts, and learn how to profit from trends. Now, the next type of trading that we have is fundamental analysis. Very important. Fundamental. There's technical, and then there's fundamental. And fundamental is an analyst method of analyzing financial markets by underlying economic, financial, and other qualitative and quantitative factors that affect the value of an instrument or security. Now, I'm the kind of guy that likes to define the things that I'm speaking, and so when we say qualitative and quantitative factors, that's basically data, right? It's a fancy word for saying data, information. And so we look at the 4 types of data. Economic analysis, what's happening in the economy. We look at inflation, and we look at interest rates. We look at selling of goods, retail sales. These are all economic data that we help use to determine what's going to happen in the pricing. Then there's industry analysis, what's happening in the car industry, what's happening in the toy industry, what's happening in the energy sector, right? These are all different things that we analyze fundamentally. Also, we have social sentiment. Social sentiment, that's what's everybody saying. What's everyone saying about the market? You know, there's an old saying that when you get a stock tip from your grandmother, you know that it's time to sell because the market is really excited, right? So when everybody and their brother knows about the certain stock, that's time for you to sell. Now, that's not a specific strategy. It's just kind of a funny saying that is true. But when everybody's talking about it, you know, when people first start talking about it, you want to get in. But then when everybody's doing it, well, then there's no reason to do it anymore because the smart people are getting out. So it's getting into a trend early, getting out before the bubble crashes, going back to the Dutch tulip bubble. The bubble crashed and it didn't work out too well for the people that didn't get out in time. And then the last type is company analysis. How much revenue does the company make? How much shares are outstanding? Does the company pay a dividend? What are the growth rates of the company? How many other investors are? What's happening in the news with the company? With fundamental analysis, there's a myriad of things to study. And when I say myriad, I mean a lot of stuff to study. And the way that I would recommend is fundamental analysis is important to help you get a gauge of what you want to invest in, but the charts is where you pull the trigger. So one of my key little bonus strategies here that I like to look at is go for new technology, because new technology changes the world. And it's been amazing, a new concept. It's been amazing for stock market growth in the past. And Kathy Wood, the founder of ARK hedge funds, she posted a great big idea report that talks about all of the new tech that's coming out. And I like to read stuff like that, and I like to invest in new tech because it's a great fundamental analysis. And that would follow industry analysis. So I'll recommend get into something new that you think has a big potential in the future. The other thing I like to look at is go for the leader. There's always a leader, and usually the leader is way better than the rest. And so if you can find a leader of an industry that is leading a growth industry, that's a great investment strategy. Okay, just a little bonus tip for those of you that are interested in getting started. We've got a lot more information where that comes from. All right, now, what is the purpose of trading? Okay, well, honestly, the purpose of trading is to make money, and that's in the financial markets. It's not always the case. Sometimes you want to trade because you want a new ladder, right? That's not to make money. That's to get you stuff you want, which is really a type of money, right? I want a new ladder. I want that bed. I want that house. I want freedom. I want freedom, right? And so you want to make money and gain certain things in your life. What is the purpose of trading? Here's an answer that seems pretty obvious, but it's not lose money. You don't want to lose money, and yet here's a little, I get to the challenges section here, but a little quick tip. You can lose money in trading, and so you don't want to do that. You need to come in with a plan. And so if you're watching this as a beginner, I want you to come in with your eyes open and with a plan, okay? And you must have a strategy. Now, with a heads up on the strategy, I do have a book coming out very soon. It's called The Complete Trading Strategy. I'll put a link to it. You can check that out as well, because it has a really good strategy in it that I've developed over years and years. All right, so anyway, steps to developing a strategy. Determine what kind of trader you're going to be. So what does that mean? Well, are you going to be a swing trader? A swing trader? What's that? Oh boy, I guess I need to go back to some definitions. Swing trading, it's when you hold the position for a few days or a few weeks. Well, then there's a position trader. That's an investor, someone that holds for years. Then there's a day trader. You're holding trades for 5 minutes just in one day. So what kind of trader do you want to be? An investor, a positional trader, a swing trader, a day trader, an algo trader who uses robots. What kind of trader do you want to be? Do you want to be a stock trader, an options trader, a currency trader, a crypto trader, right? There's a lot of decisions here. Well, I'm going to put some links in the video below, because you can learn about some of these things, because it's hard to make a decision. There's so much information. But I would say if you're just beginning, pick one, go with it. Don't get analysis paralysis. Just pick something. If you think cryptos are cool, go with them. If you like a certain stock, go with it. You know, if you just start buying a few little tiny things and get the hang of it, but always go into it managing risk. Risk. Here, let's throw another definition. What is risk? Risk is the amount of money that you could potentially lose when you're trading. And yes, trading is risky. You always need to go in with your eyes open, knowing that there's risk involved. And listen, also, don't play the markets like a casino. A lot of people think that, it'll relieve my problem. It'll relieve my pain. I'm going to go in and I'm going to hit it big in the market and I won't have any more problems. Well, your problems that you had when you started in the markets are still there. You have to solve your problems. You have to look at one problem at a time and do the work and solve the problem. One of my friends and mentors, Chris Williams, says you got to do the work. You got to do the work. Hey, let me say it. You got to do the work. All right, so step number 1 is determining what kind of trader you're going to be. Step number 2 is study potential trading strategies. Very simple. I have a book that's being released very soon on that. Link will be in the description below. Then step number 3, get education about the markets. Practice trading. Practice trading. You can use a demo account to practice. You practice with a very small dollar account. You need to start small and take step by step by step. And then step number 5 is develop with a financial plan, right? You want to learn a financial plan. That is a very important part of this because trading is one piece of the puzzle. You need to be monitoring your expenses, how much you want to invest, how much you want to reinvest, how much you want to add, how much you want to pull out of the market. What are you going to do with your profits? Are you going to roll it into something else? But just have an overall financial plan, which again, I will put some links to some other training on that. As a matter of fact, I was thinking about creating a course here very soon called The 12 Principles of Financial Freedom. And if anybody's interested in that, let me know in the comments. Say, hey, I want to know about financial freedom. I would love to know if that would be interesting because that's not market related, but it's a very basic principle that most people don't know about and I want to teach. Okay, now, I feel like it's really important for me to say this. There's challenges involved, right? There's challenges in trading. So I'm going to go over the challenges and then I'm going to talk about the benefits because I think it would be very poor teaching on me. I'd be a poor teacher if I told you about all the benefits, but I didn't talk about the challenge. Well, the challenge is there's a learning curve. There's a learning curve involved. You can lose money is another challenge. It's a mental game. Mindset like crazy. You got to develop a really strong mindset. You got to learn the basics and go back to the basics. You got to have risk management and discipline. These are all challenges. A trader will reveal how weak you are. Trading the markets, they'll reveal how weak you are in financial management. And it can be very ugly. It can be a looking in the mirror and like not liking the person that you see when you do stupid stuff over and over again that you're not supposed to do, right? But that's why you're watching this video, so you can learn how to do it the right way. Stress. Another big issue with trading and learning to trade is it can cause a lot of stress if you don't do it the proper way. It can be stress-free if you manage it the right way, which is taking care of your risk, knowing you having a plan going in, following that plan, using good mind management and risk management, there's no stress. But if you don't do it right, it causes a lot of stress. All right, now I'm going to talk about the benefits for a minute. The benefits. Well, one of the greatest benefit is wealth creation, right? Wealth creation. Trading has created more wealthy people than anything I think ever, right? Because even, business owners is a really big one, but most traders are buying businesses anyways. When you buy a stock, you buy a business. So you're a business owner when you trade, right? And so, yes, I'm going to start my own business. Well, why not just buy a share of one of the greatest businesses in the world and ride their coattails to wealth, right? That's a trader's mindset. Another great power and benefit of trading is compounding. You take that and compounding. You take your profit and roll it into the next one. And then you roll it into the next one. And then you roll it into the next one. Compounding wealth is the greatest secret on the planet. It is the secret to wealth. And so everyone should be doing this, whether you're even trading in the markets or in real estate or in art or whatever. You want to take your profits and roll it into something else. That's compounding wealth. Compounding wealth is the way to true wealth. And then the last benefit is just time and freedom. You know, doing this doesn't necessarily take a lot of time. I don't do all the research myself. I buy research reports or I hire people to do the research for me because I can and because I want to have more time. So I get people to do my research and then I make decisions based on that research. So it's given me a lot of time and a lot of freedom. I have the ability to travel, which is another great thing. I take my family, we go on vacation, we travel across the country. It's a true blessing, right? So trading has been a true blessing, and it's been very cool to be able to do it, but it took some time. It took some challenges. It took a lot of hard work. I had to do the work, and that's why I'm putting this training out there so that those of you that are just starting out can benefit from this. All right, now I want to go over a couple key definitions. Let's go over some definitions. So these are just a handful. There's a lot more on my website at the What is Trading website. I recommend everybody go ahead and check it out. But trading, the definition of trading, buying and selling instruments to make a profit. Stock, a type of instrument that represents ownership in a company. The definition of stock is a type of instrument that represents ownership in a company. Commodity, a raw material or primary hold on, Casey boy. A commodity, a raw material or primary agricultural product that can be bought and sold, such as gold or wheat or cattle or hogs or corn. A currency is a unit of exchange that's a medium for goods and services. Money, a currency is trading money. An option, the definition of option, a contract that gives the buyer the right, but not the obligation to buy and sell an asset at a specified price within a specified period. Yes, I get it. That is complicated in definitions. But basically it says, hey, if I own this car and I'm going to sell it to you for $1,000, you now buy the option to buy it at $1,000, but you pay me $10 for that option. You'd pay me $10 so that you can buy the car for $1,000. And why would you do that? Well, for cars, it doesn't make a lot of sense, but in stocks, you would do it because maybe you think that the stock is going to go up to $2,000. So you pay $10 to hold on to it, and that you can buy it for $1,000. So if it does go up to $2,000, you're like, hey, I have this option. I can buy it at $1,000. Now you automatically get that $1,000 in profit, right? So that's the benefit of options. Lots of education. I'll put some links in the description. Lots of education on options. It's a great thing. Okay, futures. Futures is a financial contract that obligates the buyer to purchase an asset or the seller to sell an asset at a predetermined price and date. And one of my good friends who was on my podcast, the How to Trade It podcast, he defined it by saying that it was a derivative. A future is a derivative. So yes, it's like an option. You buy a future at a certain price or date, but it's a copy. It's a synthetic purchase. You are not actually trading the wheat, but you're trading a derivative of wheat. You're not actually trading gold, you're trading the derivative of gold. It's a copy. It means it's a copy. Okay, bonds. Bonds has always been very confusing to me. It's been a hard one for me to wrap my mind around, but bonds, the definition of a bond is a debt security that represents a loan made by an investor to a borrower. So a bond is basically debt, right? But you can trade debt. Imagine that. That's why I think it's been hard for me to wrap my mind around. But yes, you can trade debt. The bond market is a massive, massive, massive market, and there are so many bond traders. A lot of people don't realize that. Okay, the next definition we're going to talk about is bull market. That's a pretty simple one. A bull market is a financial market in which prices are rising or expected to rise. Bear market is a financial market in which prices are falling or expected to fall. So you hear this term a lot, the bulls and the bears. Is it a bull or a bear? Well, it's if it's a bear, it's going down. If it's a bull, it's going up. And I forget, I should have looked this up. I forget where those terms came from. Somebody told me once, and now I'm neglecting that to you. If you know where the term come from, please leave me a comment and let me know. All right. Financial charts or trading charts. It's just a visual representation of financial data used to make trading decisions. That's kind of where technical analysis, which we talked about early, comes in. Candlesticks are also financial instruments. They're visual items, candlesticks on a financial chart. They're actually called Japanese candlesticks. You get those on a chart. And then broker is an individual firm that acts as an intermediary between buyers and sellers in a financial market. And then there's also market maker, the person that holds all the money and he's doing the orders. A lot of times the broker isn't the market maker. The broker is just the guy, the middleman, and then the market maker is the one that holds all the cash. And they both get a tiny piece of the action. And market makers make a lot of money when something goes up or down, and they're holding a lot of it. And then lastly is an exchange where financial assets are bought and sold. It's just like the New York Stock Exchange. Coinbase is a crypto exchange. We have the Chicago Options Exchange. There's all of these different exchanges where traders go to make purchases. All right, so that is the basic beginning. But again, there's a lot more detail that I didn't go over because of time-wise. But if you want to get the full scope of this, just go to my website, and it's tradingstrategyguides.com. What is trading? And it's /what-is-trading. The link is in the description. It's a great article, and I would love it if you'd go to the article, leave a comment. But this was designed for beginners because I got a lot of questions saying, hey, I need to know what is trading. What is this whole trading thing? And we took some time to develop this, so I hope it's helpful to you. Leave a comment. All right, well, that's it for this one. We'll come up with some more of these basics if you like them. If you like the basic stuff, let me know so I can put more of it out, and beginner stuff too. But again, thank you, and until the next video.